Welcome to part two in how to lose money in cannabis stocks. This is a 4-part series, and stick around to the end because we're going to have the answer for these 4 pitfalls that so many new investors fall into. So, part two, the casino problem. As you know, the casino itself is an incredibly robust business model because its basis is in the gambler's fallacy. And it's very easy in stocks to get caught up in the gambler's fallacy. So, what I mean by the gambler's fallacy is if we have a coin toss, I think everyone knows that the odds are 50-50 when it comes to heads or tails on a coin toss. Where it gets tricky is, say you have a scenario where you've had 5 heads in a row. Some people believe that the 6th roll is now more likely to be tails than heads because of what's happened the previous 5 rolls. This is, however, incorrect. It's still always going to be 50-50. So when we talk about stocks, the pattern that people get into is, the last 3 deals that I made or the last 3 moves that I made were incorrect. I lost money. So the next one has to be right. And this is really a surface problem for so many other deeper problems that we will get into. And Einstein, of course, has the theory of insanity, which is repeating the same thing over and over again and expecting a different result. So the past does not equal the future. If you were wrong in the past, it doesn't mean you will be wrong in the future, and vice versa. And so you really have to take each trade, each prospect that you look into, each due diligence session that you do on a company, it has to be fresh. Obviously, you want to bring your previous knowledge of investing and trading into it, but don't get caught up in the gambler's fallacy. And also, do not believe that if you lose money, you have to make it up the same way. So when people will lose money, they think, say they lose it in blackjack, there's this phenomenon in the mind. This is also why casinos are so profitable, that, okay, I'm down 10 grand, I got to make it up. And they try to make it up in blackjack, and then they fall down this pit, they fall into this pattern, this repetition, into this hole. And before they know it, they're down 10 times more than they were originally. So this is extremely important in investing. And this is a very dangerous way of investing if you're digging yourself a hole and trying to get out of it by making the same moves. So this is part 2. Like and subscribe to this video if you found it useful, and stick around for the end of part 4, where I'm going to have a form of resolution for getting past these 4 pitfalls that so many new investors to the space run into. So thanks for watching.